Strategy doubt isn't something only beginners deal with. It often shows up after months or even years of using a system that has worked well. Then suddenly a question appears. What if the strategy itself is the issue? It's a moment many experienced traders reach at some point. How professionals experience doubt. Beginners usually react to a loss by jumping to the next signal. Experienced traders approach it differently. They check their data, review their journal, and look at how well they followed the rules. But even with that discipline, a point comes where they start wondering whether the issue might be the strategy itself. That question feels uncomfortable, but it's also useful. It's a moment where some traders stop while others move a step forward. Where this doubt comes from. There are a few common reasons why this doubt appears. The first is normal drawdowns. Every strategy has weak periods, but recent losses often feel more serious than they really are. They can look like a sign that the system has failed, even when the behavior is completely normal. The second reason is changing market conditions. A strategy built for trends won't perform the same in a range. Low volatility phases and high volatility phases create different expectations. When the environment shifts, results change with it. Third reason is performance pressure. Seeing daily P&L or watching other traders post perfect results online can shift attention away from following the rules. At that point, the doubt can feel personal even when nothing is wrong with the system. How top traders manage this stage. Several well-known traders have explained how they handle periods of strategic doubt. George Soros believed that when a position starts to feel mentally heavy, the issue is often the position size or the timing, not the entire strategy. His approach was simple. Before questioning the system, check the risk. Stanley Druckenmiller handled doubt by reducing size and going back to the data. After ignoring an important signal earlier in his career, he created a rule for himself. When doubt increases, cut exposure and review the numbers. Dalio uses a different filter. He asks whether the recent results fall inside the strategy's normal range. If the drawdown matches what the system showed in testing, he stays with it. If not, he reviews it. And Paul Tudor Jones focuses on reducing pressure before anything else. When doubt rises, he cuts positions, closes a few trades, and steps back long enough to think clearly. A practical framework for handling doubt. A simple framework can help traders handle doubt without reacting emotionally. The first step is to separate the issue. For the last 20 trades, write down whether each problem came from the strategy, the execution, or the market environment. Most of the time, the issue comes from the last two, not the strategy itself. The second step is defining a rule for review. Something like, if the last 50 trades fall below the historical average, pause the system and review it. This turns doubt into a structured trigger instead of a reaction. And third, reduce size without leaving the market. Professional traders rarely walk away completely, they stay connected but with lower exposure so they can think clearly and make better decisions. Conclusion. Doubt is a normal part of trading even for experienced traders. When it's handled the right way, it can strengthen the system rather than interrupt progress. What makes the difference is how traders respond to that doubt, not the effort to remove it completely.